Just take a look at these liquidations from the last few days, and you can clearly see that this is really just a pure market maker game. It's completely manipulated, and something has really changed here, and it's really just a market maker game now. But these numbers already show that the market makers are currently making millions. They're currently making a killing because they can work through certain zones and whatever. In combination with insider trading, billions are being pulled out of the markets every month and billions are being earned. You really have to understand this in relation to the current situation, but it's becoming increasingly obvious that Donald Trump is currently instilling fear in the markets. I mean, just take a look at this. The S&P 500 has lost $3.3 trillion since February 19th. That's crazy. That's as much money as the entire crypto market cap. So we're seeing huge panic in the stock market, massive sell-offs, and not without reason. What Donald Trump is doing, he's doing it deliberately. And that's something you need to understand. You have to imagine, last year the biggest fear for this year was a recession, and according to indicators, it currently looks like a soft landing. It doesn't look like we're heading into a recession, and that's really very, very positive. Now that this fear is gone, one might think, okay, this could allow more money to flow into risk assets again. But that's not really the case. Because, I mean, we can see that too. Not much capital is really flowing into risk assets, and I found this report very good, explaining why the Trump administration is doing this right now. They have $7 trillion in debt that they need to pay back in the next 6 months. If they can't manage that, then they'll have to refinance. And the thing is, the Trump administration doesn't want to refinance at these interest rates of over 4. I mean, the interest rate for annual government bonds was at 4.8% this year. That's just crazy. And of course, they don't want to refinance under such bad conditions. That's understandable. Now we have to think about how to get the annual government bonds to decrease. To achieve that, the markets need to show signs of weakness in growth. The markets need to be instilled with fear, and interest rates need to be lowered. That's extremely important. That's how you can significantly lower the annual government bonds, and all of this is only possible if you create massive uncertainty here by imposing tariffs. We now have tariffs against Canada, Mexico, and China, and those are already significant tariffs. These tariffs are also partially being rolled back. This creates extreme uncertainty in the US economy, and people flee from stocks and move into bonds because it's seen as safer. You can see that right now in the stock market. We're seeing huge outflows. Some of this money is then shifted into bonds to lower the short-term yields there, and that gets the bond market to start buying bonds as quickly as possible. Because people are afraid of stocks, they flee into bonds. This would lead to lower yields, and as a result, you could finance that $6 trillion gap more cheaply, because you'd have lower interest rates. Trump is doing this whole thing for short-term pain, but for long-term success, so he is doing it very cleverly, with a long-term perspective. In the short term, however, things are not looking so good for us, and you have to understand that that is the difference to the previous bull runs. Right now, we just have too much uncertainty, but it's a deliberate uncertainty. I mean, one day you see really positive things from the Trump administration, and the next day you see more tariffs, which pushes the stocks down again, and then that strengthens the dollar. You can see for yourself this uncertainty is enormous, and it's being done on purpose so that, as I said, in the long run, they can pay back their debts better. However, there is some good news, and that's probably also the reason why we've seen such a rise again. We're almost back to the dollar, which is very, very positive. But as I said, last night Zelensky announced that they are now ready to fight for peace and to ensure peace, and it looks like the war is slowly coming to an end, which would be very positive, of course, for the crypto and stock markets. And it really looks like they're slowly starting to sit down at the peace table. Yeah, well, you could really see that Donald Trump has put a lot of pressure on Zelensky in this regard. It was almost conceivable that Zelensky would eventually give in. It's very interesting. That's really positive. But you can see that there's uncertainty at every corner. On one hand, there was this concern about what a recession would look like. On the other hand, we don't have a loose monetary policy in the US in any way. The dollar is being strengthened in part as we are currently in a trade war with the US, Canada, and so on. So you see, there are so many issues to deal with. And all of this, of course, makes the markets seem a bit skeptical, or the markets want to wait and see what is really going on here. And to be honest, I understand that, but like I said, we probably need to wait a few days, a few weeks until things start to stabilize, or until we've seen the worst of it and we can see a turnaround. This Friday is going to be very interesting. There, Donald Trump will, it is said, speak again about this crypto state reserve, and in this respect, I think it will be another ETF thing. Most people overestimate the short-term price impact, but underestimate the long-term growth that comes with it. I really believe a US state cryptocurrency reserve is going to be crazy. You have to imagine that other nations will follow. Just the fact that the US government announces it might pump 100 billion into Bitcoin each year would have such a huge impact on all the companies, on other states, and on the entire crypto market. Because, as I said, other states will follow, other companies will follow, other people will follow. That gives us a whole different level of security, and it will bring a lot more capital into the markets. These are things that are extremely positive, and I believe they are definitely being underestimated in the long run. We definitely need to talk about Ethereum again. The hardest part is, of course, all of this for the altcoins. And look at how Bitcoin was a year ago at amount dollars, now at amount dollars, and check out Ethereum in COTS comparison. That's crazy. It really looks like Ethereum is the loser of this bull run. I just hope that changes again because Ethereum is completely connected to the altcoins. But here with Ethereum, we also see correlation, how it was then, how it is today, and we can speculate and hope that things will get better here too. Especially that we can finally break through certain zones properly. From a technical chart perspective, there's still a lot that can happen with Ethereum. However, we have to say that Ethereum is really completely tied to this quantitative easing, to this loose monetary policy, along with all the altcoins. And we see that Bitcoin was still able to rise, which is extremely positive. So as I said, we had a tough monetary policy. You can see that here in blue. The whole time, money was made more expensive, money was taken out of the markets, and Bitcoin was still able to rise, which is extremely positive. But for the altcoins, and especially for Ethereum, it just wasn't enough in this regard. That's why it's important that we see this loose monetary policy. That's the most important thing for the altcoins. And still we see little by little how Trump's organization is very diligently accumulating Ethereum. These are things to pay attention to, things to consider regarding what's happening in the background. I think the most important thing here would really be this clarity in the real economy, because without the real economy, these 4-year cycles don't mean much to us. That needs to be sorted out first, and then we can take a look at the next steps. But regarding the 4-year cycles, it's also what I mentioned in the last few days. Either we will see a turnaround now and reach new all-time highs and so on, or we will really stagnate a bit over the summer and then build up again towards the end of the year. Statistically speaking, we have had the bull run peak 17 to 18 months after the halving each time, so the peak should actually happen in September of this year. That means we could really have some positive months ahead of us, and that's why it's very interesting to see what the next months will look like. Right now, this real policy needs to be clarified first, and then we can continue to rely on Bitcoin and especially on the altcoins. Yeah, folks, there's really not much more to say. As always, leave a like and a comment on the video and see you next time, friends. Hi.